Danie, many thanks for making time to speak to us. Uh, you actually do allude to this. I actually did mention it, the macroeconomics and the global headwinds and what that has meant for master drilling. But on the other side, many are looking at commodity prices having a bit of a recovery. You know, isn't it a bit of a double-edged sword here?
Arnold, I think the two, just to answer your question and to put them in two boxes. I think the one is commodities is what it's like. We know it's going to be volatile. And if you talk about commodities, I think copper, in the copper space, it was in 18 pretty stable. And I think the outlook for copper is okay. I think the zinc, which declined from 3.5 below, you know, the 2.5, 2.4 number, especially in the back of our Peruvian operation, we've got a setback. So I think, you know, if you talk about commodities, some are still doing okay. And again, the zinc was probably the devil in the room for 18.
Right. If we were to just maybe delve into away from having a holistic aggregate figure or country, which could be, well, just the macroeconomics, if we were to look at China as a whole, do you feel that pinch when China slows down? Do you feel, is this reflected on your side?
Absolutely. I think this ever ongoing trade war between America and China, which you guys probably know more of, certainly impacted, especially on the Peruvian clients. And hence the reason why our business in Peru, you know, withdraw from a 22, 24 machine operation to a 16. I think there's a lot of uncertainty, especially in the zinc space.
Right, let's delve into the cash. Definitely everyone loves to see the cash flow side of things. Net cash generated did decline to 25.8 million for the year. But your net debt, on the other hand, has gone up, what, 14 million, right, from the previous year. How are you balancing the two here? Because cash from operations is clearly shrinking, but the debt is going up. How do you address this to investors?
I think the single reason for that is the acquisitions last year. We took up the remainder of the stock in the battery bed business early last year, and then we had the acquisition of the Atlantis business towards the end, and also the acquisition half year of the Pro business. That pretty much dealt with the cash that was spent in last year.
Do you have to explain to some of your shareholders when this question actually comes up, whether or not you're getting too geared at a time when there's uncertainty in the global space?
Look, we currently get at, I think, 17.6, and we set a target of 30%. So there's still some runway left if we want to build another machine or machines or maybe another mobile miner. But I think, you know, 30% is pretty much the ceiling we set ourselves. So I think we'll be okay. A huge increase from a 2.7 to 17, but, you know, I think the money for 17 or 18 was well invested.
Now, you are quoted having a very, very positive outlook in the foreseeable near term, saying, although immediately not reflecting in our numbers, we do expect a positive impact on the revenue. Could you just maybe share some insight on where the growth is coming from? You definitely have more insight into the figures and the outlook for the company going forward.
You must remember what we've been doing last year. Again, just to park the acquisitions and M&As that we've done last year, we've ordered a machine, that mobile miner of ours, well north of 100 million rand without an order, without any contract. And today, fortunately, we have a contract and we have an order for the machine, and the interest for that machine is just, you know, phenomenal. But that being said, I think the lack of the capital spent on that mobile miner is probably going to be 2 years, 18 months, 2 years. So some of the investments that we've made is certainly not short term. It's more for the medium term. And hence the reason why we're in for the long term and not for the short term.
There's been a lot of talk about some operations maybe in the DR Congo and how this might, well, for the likes of AngloGold, Barrick. Do you see this sizzling into some of your orders? If the AngloGold Ashantis are having some headwinds in the Congo, is this reflected on your end? And do you capture this and have it on a risk premium, should I say?
Look, the short answer is, you know, we follow the miners. So ultimately, if Ashanti demobilize the Gator or the leaving Tanzania or scale it down, indirectly certainly impact on the business. But if you talk about the Barricks, the Randgolds and the Ivanhoes today, being loyal clients of ours, I think we've done a lot of business with those guys, and I think the Kabali contract for the business, very good. We've just signed a contract for the Kamoa project for Ivanhoe. So indirectly, yes, but to date, not a big business as we speak.
One particular acquisition here sticks out. I know you've alluded to this already, Bektemet. It does stick out because it's giving you all this exposure in Europe, South America. What is the return on this? Have you quantified it yet? If yes, definitely, I'm sure you have. Just give us a sense of what the returns are looking like on this.
Look, we probably would get returns of around about 10%. So first world country, you will probably not make the same returns in a first world country opposed to a third world country or emerging market. I think that's one. The second one, you must remember, when we bought the company or decided to actually exercise our right to take up the rest of the stock, the utilization of the machines of that country or the company was extremely low. And here's the reason why we decided to buy the company and to get them out of their comfort zone, to get them into the southern part of Europe. Some machines was even shipped to Australia. A machine was shipped down to Chile. And some of the drill pipe was shipped down to South Africa. So there's a machine today operating in Turkey. So and that was the basis of this deal. It's just quick wins were get the utilization up and get these guys out of their comfort zone. And for us as a company, to learn from Scandinavia. I think the way these guys operate is very different to what we used to in South Africa. It's a one-man operation, one crew, opposed to us, with a 10 or 15-man operation for a similar function.
Finally, one thing that really stuck out from your financials is the depreciation aspect. Now, you're very technical, you're a machine-heavy kind of business, and you need not explain that. But if I compare your depreciation for 2017 and put it against the depreciation for your assets for 2018, I'm seeing some of these assets actually from plant and machinery, 41 million last year, up to 50 this year. I can't go on about this. The depreciation is climbing as a whole, if we were to compare this year on year. What is the justification here? And as an investor, when do I start to get worried that your depreciation costs, this could be a signal that maybe some of your machinery is nearing its end life?
Now, maybe a step back, without going into the detail. Our depreciation policy for our machines is 20 years, irrespective whether it works or not. So the moment a machine has been commissioned, the clock starts to tick. So that's the one part. And the other part is obviously on the drill pipe, which is more depreciation on an actual measurement basis. So that's pretty much the policy of depreciation.
Not straight line.
Not straight line.